Well, folks, I've spent about $52,000 in the last few days on stocks and options. And essentially in this video, I'm going to show you exactly what I've been spending money on here recently. And yeah, I'm not buying watches or houses or anything like that right now. No cars, strictly stocks right now. And I'm very, very focused in this market right now on specific stocks at specific prices. And let me address something right off the top here, okay? And I think this needs to be said before we get into, the $52,000 I spent over the past few days in these stocks and these options, because this is important, okay? So in a market like we're in right now, the VIX hit over 37 here recently. A lot of volatility in the market. The NASDAQ's in bear market right now. The Russell 2000's in bear market right now. There's so much fear in the market right now. The AAII investor sentiment, a couple weeks ago was about the lowest we've seen in many, many years, right? You have stocks that have been absolutely devastated, down 40, 50, 60, 70, 80, 90%, right? You have all this negativity of inflation, the Fed, Russia, oil, everything. It's a lot right now, right? And so I think it's a common question, like, why buy now, right? Like, why not just hold that $52,000 cash? Everything's been going down. Maybe you could buy it a week from now cheaper, a month from now cheaper, 3 months from now cheaper, 6 months from now cheaper, and those sorts of things. Here's the deal. I like to keep my investing process very, very simple. It can get a little more complicated when we're talking about what type of business models I like to buy and the growth trajectories on those business models and the valuations and things like that. But one thing I do consistently is I buy stocks regardless of the market we're in. Regardless if we're in a greedy market, a fearful market, a market that's moving around, a volatility market, a scary market, a market where it seems like the coast is clear. Regardless, I buy stocks. I change my strategy slightly depending upon the market we're in. So in a very fear-driven market like we're in right now, where stocks are getting devastated, everything's getting hammered, I'm a more aggressive buyer, and I specifically like to flock to smaller cap stocks and high growth stocks. That's where I like to flock, because that's usually where you get the best opportunities in a fear-driven market. Now, on the flip side, if you're in a very greed-driven market, like let's go back to the last time we had a very greed-driven market. This was in December of 2020 into January 2021. And at that moment, I was buying some what would be seen as extremely boring stocks, like JP Morgan Chase, like Walgreens Boots Alliance. Fives are very, very what would be seen as boring stocks. And I was putting money in a lot of those stocks at that time because that's where opportunities were. So I will invest wherever the opportunities are given. And if we're in a greedy market, I'm going to go more value stocks and more dividend plays. And if we're in a market where everything's being slashed left and right, and you're seeing this stock's down 40%, this stock's down 60%, this stock's down 80%, that's the type of market that I'm going to be much more aggressive, and I'm looking for more growth stocks. And, because that's where you're going to see the real opportunity. So that's the way I invest. It's not right for everybody. Not everybody wants to buy in this sort of market where you have a lot of danger out there. And dang, do we have a lot of danger out there. It's my strategy. And it's what I've been doing since I started in this game in 2008, 2009. And it will always be my strategy. As long as I'm a stock market investor, this is my strategy. I stick to my strategy. I stick to my game plan. I don't try to get in and out of the market or something like that. That always ends poorly. And I stay in my lane, okay? So hope you guys enjoyed that little beginning there. Just wanted to cover that off the top. Alrighty, let's get into these stocks and why I'm buying them. So here today, I bought $9,765 worth of PayPal stock, 105 shares. $93 I paid for PayPal stock. So, with PayPal, right? This is a stock that's been obliterated. This stock's down 50% plus in the past 3 or 4 months. It's been nasty for PayPal. And PayPal is one of the most disrespected stocks in this market, because you're looking at a company that has incredible revenue growth in front of themselves. This is a company that I expect to grow 15% revenues, meaning top line, for at least the next 3 years. And I expect them this entire decade to be able to grow at a 10% plus clip year in and year out. The company's even expecting closer to 20%. I like to go a little more, let's call it modest. Forward P on the stock has gotten down to under 25 now. And price to sales ratio is about the cheapest it's ever been in this company's history. PayPal and Venmo are just two beast apps that just have incredible growth and continue to dominate in the finance category. You get buy now, pay later in these plays as well. So instead of playing something like an Affirm stock, I can get that same exposure with PayPal. Obviously, it's not as direct, but it's more exposure to that industry, which continues to be an industry that will get more and more popular over the coming years. So when I look at PayPal, I feel like, especially with this stock under $100 right now, I feel like this is one of the safest stocks I can possibly buy in the entire stock market over the next 3 years. I don't think it's the safest stock, but I think it's of the scale of safer stocks, over the next 5 years. I think this is among the safest. And what I look for here is also, I think this is a double up to triple up opportunity over the next 3 to 5 years as well. So I'm looking at safety, and I'm looking at, I think, going to be a very, very nice ROI on PayPal stock. That's why I'm investing in this company. I also see a company that, let's say hypothetically their stock price is not rewarded over the next 3-5 years. They could easily start paying out a dividend if they want, do share buybacks. It's a cash flow machine. Their cash flows will continue to build over the coming years. And it's an innovative company that could easily start other businesses or acquire other businesses, right? They have a massive deal coming with Amazon, which the market is not even looking at right now. And don't underestimate how big that can be for Venmo. Venmo and Amazon have a partnership that's supposed to come out at some point in 22. We don't know exactly when, and the market's not even looking at that right now. And I can tell you that's a huge mistake the market's making. So I'm looking at PayPal. I absolutely love this stock here, and it's just one of those stocks I can't not buy the stock right now. I cannot just not buy the stock. So I went ahead and bought 105 shares at 93. And sure, it could go lower, and it could go to 70, it could go to 80 or whatever price, right? But on a stock like PayPal, I feel like we're pretty darn close to a bottom with this stock. They came off of two what are seen as disappointing quarters. I think from here on out, they're going to report not disappointing quarters, and their stock price will be rewarded. And so I feel like, like I said, I feel like we're fairly close to a bottom in PayPal. And so I got to continue to just take advantage of these deals, because PayPal is not going to be stuck at under $100 forever. I can tell you that. Maybe we get a few more weeks of this or a few more months of this, but I can tell you it won't be under 100 forever. Let's put it that way. Okay. So yeah, PayPal, I went ahead and bought that one. What's next up here? Well, it is Oatley. So Oatley, I bought 1,111 shares of stock here today at $5.75, $6,300. Okay. So the reason I bought Oatley, okay. So first off, this is a company that's actually reporting earnings in the next 24 hours. And when it comes to Oatley, I wanted to just get my position a little bigger going into these earnings, just in case it makes a big upward move. I don't know if it will, and it's one of those stocks that it's a huge revenue growth engine. It's a huge revenue growth company, but they're a money loser and should be a money loser for at least the next couple years, right? At least this year and next year. And so I don't know, maybe the stock goes down in earnings, and that's fine. I'd be happy to pick up more shares, because I'm a little light on this position from where I like to be. I think I have, in terms of Oatley, in my big dog account, I think I have like 8,888 shares of the stock right now. I would like to ideally get to a place where I own over 20,000 shares of Oatley. So I'm actually a little undersized from where I want to be with Oatley. So I actually am hoping it goes down in earnings, but just in case it doesn't, and let's say the stock spikes 10, 20, 30%, it's not out of the realm of possibility. It's a heavily shorted stock. It's a smaller market cap. It's got incredible growth. There's no telling it couldn't spike huge. Just in case, at least I have my position built a little bit bigger here. Oatley's a company I'm looking at here, right? And that's completely disrupting the dairy industry of traditional cow milk. Is obviously they're a massive disruptor in that market. Ice cream products, they're already very successful there, and they have so many other products launching, yogurt type products that I think are going to be huge hits. And when I see the sell through of this company, it's like nothing I've ever seen from the drink industry in terms of a new product. Like, if you think about like almond milk and those sorts of things, right? Oatly smashes those guys, okay? Almond milk and all those other alternatives, they're rather a joke compared to the way Oatly sells and way oat milk sells. And what I see is when somebody's going to get used to using Oatly, they're going to use that product for months or likely even years or potentially decades to go into the future. And I've seen it with myself. I switched over from cow milk to oat milk probably 2 or 3 months ago. And now every single week, guess what? We're out there buying, 6 containers of Oatly now, 6, 7 containers of Oatly. My kids drink it, I drink it, my wife drinks it, we love it. And, now we're spending, anywhere from $30-$40 a week with Oatly roughly. A few months ago, we were spending no money, and that's week in and week out. Every week we go to the grocery store, we buy a bunch of Oatly. And so I look at it as, man, that's going to be a very, very sticky business model. Long term, could you get competition from, let's say, store brand oat milk products and those sorts of things? That's a possibility, but that could be quite a while away because it's a new industry. People are going to go with whatever is the name brand in that industry. And I think if Oatly does a really good job, I think they could build out a Coca-Cola type brand name, a Pepsi type brand name, where sure, people might buy a knockoff product, but they're really going for the namesake one. I can see a day where Oatley has investments from companies like, you guessed it, Coca-Cola and Pepsi. I think they're looking at Oatley and would love to get some ownership in that. I was an investor of Monster Beverage back when it was Hansen's Natural Beverage. And what happened to Monster over time, Coca-Cola ended up buying about a 20, if I recall, it was like a 22% ownership position of Monster Beverage. And I can see a lot of these big drink players seeing Oatley, having that business tear it up and wanting to say, you know what, we think we might make a major investment here. I don't think Oatley should sell out. And I understand you could get a quick ROI on that. And, shareholders like myself that are buying the stock now would make a bunch of money. But I don't think they should do that, because I think Oatley's, the way they're setting up their business, I think they could actually become a giant in the drink industry over time, and in the dairy industry as well, and other products. So if anything, I think Oatley should maybe consider taking investments from some other big players if it's strategic enough. And outside of that, they don't really need anybody's help, and they shouldn't sell the company. So yeah, I love Oatley, and I'm a proud shareholder, and I hope to be a much bigger shareholder in the future and actually own a lot more shares. So I'm hoping the stock drops on earnings and maybe goes down to $4 or something like that. I would love that. If it doesn't happen, it doesn't happen. So that's why I bought some more shares of Oatley. Okay, next up here, what did I buy? Honest. So I bought here today 1,112 shares of Honest Corporation, HNST, $5.16, which, if you don't know Honest, they make diapers, baby wipes, beauty products, all those sorts of things. A big player, and I also bought some more shares the other day, and then we'll get into the options, okay? I bought another 1,111 shares on the 4th at $5.49 there. So when it comes to Honest, they're stealing market share from the big dog competitors, all right? And so diapers, wipes, makeup products, beauty-related products, soaps, shampoos, all those sorts of things they sell, okay? And as somebody that has a little baby right now who's now about to be 3 months old, we use a lot of Honest products in this house nonetheless, right? And if you have a kid, you might as well, right? A little one at home, and shout out to all the little dads watching, and the moms as well, okay? Of the little ones, right? So when I look at this company, I see a company that's stealing market share from big dog competitors. I see big dog competitors, all the big guys have all announced they're taking price increases in 22, okay? So Honest is in the premier position, in my opinion, right now, because here's what Honest can do. They can take pricing as well, right? And get their business to profitability faster than, they might have otherwise, right? Because we always know the big corporations, they always find a way to make more money than not make, right? So they could do that, or they could keep prices lower and potentially continue to steal market share from big guys like Procter & Gamble and Kimberly-Clark, and they've already been doing that. If you listen to their last earnings call, they're stealing market share. Okay, so it's not like this is some pie-in-the-sky opportunity where it's like, maybe they're going to steal market share someday, but I don't know. No, this is actually happening now. And so they're in a really great position. I think margins are going to be helped out big time by the beauty business, which their beauty business historically has not been very large, and I see them expanding that business over the coming years in a massive way. They're very successful in social media. They really understand the new age of marketing. This is a company that's basically grown up in the last 10 years. And new company to public markets. I think they're going to get a really loyal shareholder base with this company over the coming years. As they show, they're going to continue to either take market share or grow revenues. And then as they hit profitability, that will be the big step change for Honest. I don't think they're going to hit profitability in 22. I think they're going to lose money, and everybody expects them to lose money in 22. But I think the loss will be much less than 21. And that's going to be massive. I mean, absolutely massive for this company, because everybody understands you getting closer and closer to that profitability line, you're going to jump over. And I think 23 is when they jump over and start hitting some profitable quarters. And then after that, there's just a consistent profit machine in a cash flow machine who can just continue to pour money into the business, just continue to grow this pie bigger and bigger. And so I'm looking at a stock that I feel like is one of the most attractive risk rewards in the stock market right now. Even though it's a smaller cap company and you don't usually think about those as like being not that risky, I think the stock has fallen so much, it's been completely de-risked now at this point in time. And the upside in the stock, in my opinion, is like a 3x plus over the next, like three to 4 years, essentially, based upon where I had their net income going and the type of PE they'd be able to command on this company. So what I'm looking at with Honest is a stock that has very limited downside in my opinion, and huge upside over the next, let's call it 3 to 5 years. So, and actually a great business model long term, where Honest is one of those companies, to be honest, no pun intended, nothing short of extraordinary. Honest is one of those companies, I could potentially hold way past 3 to 5 years because it's such a great, safe business model, in my personal opinion, that who knows, I could hold that one for long in the future. I could potentially hold something like an Oatley long into the future, right? So yeah, that's why I'm putting some money into Honest right now. I absolutely love that one. I love its valuation, and there's no stock in the market right now. Let me make this very clear. There's no stock in the stock market right now that I think has a better risk-reward profile than Honest. And that's out there, including PayPal, and I love PayPal, including Tattoo Chef, and I love Tattoo Chef, including Oatley, and I love Oatley, right? Including Meta, which I love Meta. There's nothing. I love Amazon right now, and I'm not a shareholder of Amazon, but I actually think that Amazon's pricing is extremely attractive at $2,700 right now. But I think there's nothing that has a better risk reward over the next 3 to 5 years than Honest. Let me be very clear about that, okay? All right, guys, so those are stocks I bought straight up here, okay? Now let's get into the options, because I have bought some options here very recently, and let's show you that. Alrighty, folks, so on March 1st, I made a deposit of $25,000 into my options-only account. So in my private stock group, I have 3 different accounts in there. I have the main public account, which we started, 4 years ago or so, from very, very minuscule amounts of money, and that one's at $1.2 or $1.3 million. I have a dividends only portfolio that I started like a couple years ago, and that one's at like $175,000 now. And then I have my options account, and the options account started very, very bad. 2021 was the first year of the options account. It started really, really bad, but I think over time I'll get that account to a very, very good place, and we'll build out and we'll be successful. 2021 was my first year of ever taking options somewhat serious, so I got a lot of work to do there when it comes to options. All right. So when I'm looking at options here, okay, first one I bought is some Corsair options. Now, what you're going to see is I buy my options with time to play with. A lot of people, if they are buying call options, they do it a little more shorter term because they're trying to do more like a trade. I think a little more of a long-term perspective, right? So I'm always if I'm going to play a call option, I like to go small, right? So like, I think a lot of you guys watching this, what I probably have in the market roughly, right? So it's not like 25K is like breaking the bank when it comes to my option plays, but I like to have something that's longer term in duration, right? So these options expire in January of 2024, January 19, 2024, okay? And these ones there, those ones basically have a strike price on them of $20. Now, unfortunately, I just realized my screenshot doesn't have the pricing, but you can go on Yahoo Finance or whatever and see like what those are trading at. They're trading somewhere around, roughly where I bought them at. Some of these might be a little down. Some of them might be a little up since I bought it. It was just a week ago. But basically, the $20 strikes, right, which Corsair right now is trading at $21-ish, $22 is where it's been trading at recently. So, obviously this is a lower strike price than what the stock price is right now. That usually provides you a little bit of safety, right? So, just in case Corsair doesn't go beast mode over the next, let's call it 22 months, just in case that doesn't happen, it's a little bit of a safer play, just in case Corsair just modestly goes up between now and then, right? Dropbox, I bought, once again, some January 19th, 2024 options in terms of when they expire. These ones are at a $23 strike price there. Dropbox here today is probably $20, $21. I'm going to probably look at more Dropbox call options. That's definitely one I'm going to consider buying some more, maybe at $20 strikes or $18 strikes, something like that. So that's what I'm looking at. And obviously I bought there $2,000 worth. I bought about $3,000 of this one here, okay? HNST Honest. So $5 strikes on that. Honest is trading at 5 something right now, roughly. So those ones expire in January 2024 as well. I did load up. This is a pretty darn heavy one. I went here and Beyond Meat. Okay, Beyond Meat I think is in for a great next couple of years. I really truly believe that. With their McPlant burger, with the deal they have with KFC and the deals they're doing with Yum Brands, potentially a huge Taco Bell deal coming down the pipe. And I see them with all the fast food advertising for their products out there. I see their retail business getting to a much healthier place. So I think Beyond Meat's going to have a reacceleration of growth this year, which is very important for stock. And very rarely you ever get a reacceleration of growth and not see that stock price make a pretty massive move. So that's why it went so heavy, which this is pretty darn heavy for me for one stock for call options. $11,000 worth. And those ones are at a $45 strike for Beyond Meat. And Beyond Meat, you know, that stock's somewhere around 45 roughly, maybe a little under $45. So it's right around where it's trading at currently. I think I'm going to do really, really well on those. And obviously that's why I went so dang heavy. I think I'm going to do well on all of them, right? You don't buy something because you think you're going to lose money on it by, 2024. PayPal, I bought $3,100 worth of PayPal call options here that expire in 2024. Those ones are at a $100 strike. Obviously PayPal today is trading like 93. So it's around roughly where it's trading at. Smile Direct Club, I bought $1,000. It's a high risk play, but man, these could really pay off if that one goes, gets a much healthier business. Okay, they had a horrible 2021, but I think they're on pace for a much better 2022. But this stock, as far as the strike price, $2 on that one, pretty darn low, right? And then some more Corsairs here, and this one's obviously way in the money. This is a $10 strike in terms of these Corsair here, $10 strike price. And once again, that stock's trading at $21, $22. So I went a little safer there. Obviously, I'm only going to buy call options in these stocks unless I'm only going to put money in them if I expect them to, have at least a 2x, 3x type return over the coming years. That's what I think I'll likely get in a lot of these stocks. I think a lot of these stocks will 2x or maybe more than that over the coming years. But we'll see. It's riskier plays in terms of, just doing call options in general, because, you can say, well, what if the stock market is still just down and in a bad place come January 2024? It's absolutely a risk. And that's why when I do call options, I don't bet the farm on them, because you never know. What if you were in a down stock market for years, let's say potentially? That doesn't happen very often, but what if you were? And so that's why, you see a $25,000 move and not a $250,000 move. My entire options account is probably worth less than six figures, to be honest. Obviously, if these stocks all go beast mode, it'll be worth multi-six figures real quickly, but as of right now, it's worth less than six figures. So, So anyways, I hope you guys enjoy this as always. Just kind of knowing what I'm up to in the market, and I buy the dip at the end of the day. And if the stocks continue to go down, and Honest goes to 4, and Oatley goes to 4, and Planet 13 goes to 1, and Tattooed Chef goes to 8 or whatever, I'll continue to buy the dip. That's just what I do. And the more undervalued stocks are, the better my returns are going to be over in the coming years, as long as I'm right in these business models. And if Dropbox goes to $15 and PayPal, whatever, I'll just keep buying the dip. That's just what I do. That's what I've been doing since I was a minimum wage worker. That's what I did when I was working at Quick Trip. That's what I did when I was doing my real estate marketing company. That's what I do as nowadays on YouTube, right? That's just what I do. So hope you guys enjoyed this video. Speaking about getting some free money, Moomoo right now has an insane deal going. Check out pinned comment down there. Right now, what they're doing essentially with my pinned comment is you get 3 free stocks with a deposit of any amount of money, okay? They got 1 free stock between $3 and $3,500. You get 1 free stock between $9 and $3,500. And you get 1 free Neo share as well. Like, it doesn't get much better than that. So check out the pinned comment down there. Much love as always. Make sure to subscribe to the channel and have a great day.